Ladies and gentlemen, here in this video, we will go over everything you need to know about tomorrow's summary of economic projections and the Fed meeting, because this is really going to be the biggest catalyst in markets you've had for a very long time. And the last summary of economic projections was on December 18th, and the S&P fell about 3% in 2 hours. It was a big shift. And there's a couple of possible outcomes in tomorrow's summary of economic projections. Some could be really bad, some could be not as bad as expected, or some could actually be maybe seen as positive. And I will go over those scenarios here in this video with you, so you are well prepared when the SEP comes out tomorrow at 2 p.m., and you will be able to react accordingly to it. Now, on top of that, we will talk about what this could mean for Tesla, because Tesla stock was down over 4% today. It's been a rough couple of weeks and really a couple of months for Tesla. And if things do go well tomorrow, it could be the justification for a nice bounce in Tesla stock. In fact, today you had a lot of good news and Wall Street just really didn't pay attention to it. And that's kind of been the theme as of lately. Eventually that will change, but for now, bad news is recognized while good news is not. That can be an opportunity if you are a savvy investor, and I'll discuss that later on throughout this video. But first, we have to talk about the big catalyst coming tomorrow. That is the SEP, and Fed Jerome Powell will get up on the podium at 2:30 and read a statement. The statement tends to move the markets higher, but it's already known information at 2 p.m. It is the actual question segment of the conference that is new information, that is unscripted, that hits the headlines, that really can move you. So yes, we have a lot to go over here in this video of news on the day today, sentiment, positioning, what's going on with markets, the data, there's peace talks about Ukraine again, but all of that is secondary to what we're going to discuss first, and that is Jerome Powell's conference tomorrow and the summary of economic projections. And I'll give you the silver lining. The best case scenario, if you will, is nothing changes. Nothing changes. The Fed's on pause until they see better data. They're not concerned about a recession. They're not really thinking about raising rates at this time. That's your best case scenario. Now, what's going to make the markets move tomorrow, up or down, is anything new. If Powell were to theoretically, let's say, come out and talk about a recession, that they may need to cut rates more than they expect this year because the economy's weakening, well, you can make an argument that that would be negative for markets, at least initially, would be good for bonds, and potentially, once we kind of factor in what more rate cuts could look like, could inevitably be a positive for markets. Markets tend to like rate cuts. Or if Powell comes out tomorrow and they're thinking maybe they're going to cut rates less than twice this year. Maybe they're not going to cut rates at all this year because of some of the tariff inflation uncertainties. Well, that's a whole nother can of worms that would obviously be negative for markets. So what you're seeing today is a risk-off sell-off. The MTUM ETF is down 1.64% today. A lot of other risk-off stocks or risk-on stocks like Tesla and some of your momentum names are also down a lot more than that. You can see XLP today, this is the Consumer Staples ETF, is only down 0.64%, and something like the RSP is down about 0.5%. So some areas are doing better than others today, especially, everything besides big tech. Like big tech is getting washed today. Apple's down 1%, Meta's down almost 4%, Amazon's down 1.5%, Nvidia's down 2.5%, Google's down 3%, Microsoft down 1.5%. Big tech continues to be an area that's getting sold. So at 2 p.m. Eastern Standard Time tomorrow, you're going to get the Fed interest rate decision. Now, we're not expecting the Fed's going to cut rates, raise rates, anything like that. They're not going to change their policy tomorrow. Okay, there's a 0% chance of that. So if you're betting on that, that's a bad bet. They're not going to do anything tomorrow. But at 2 p.m., you will also get the summary of economic projections. Now, the summary of economic projections looks like this. You get, let me zoom in a little bit here. You get the median forecasts. I mean, you actually get the range over here, like the highs, the lowest. What people really care about is the median here. So you get the median target for GDP this year, next year, and 2027. You get the unemployment rate as well, PCE inflation on the headline, core PCE inflation targets, and the federal funds rate projections. And again, what's really going to move the markets is this. And what changes do we get? So I can show you the changes that we got from the last SEP, which I believe was in September, until the latest one, which was December 18th. So the change from those two SEPs, December 18th, obviously on the S&P was a really bad day. Markets were down 3%. And a lot of that selling, really all of that selling happened in the last 2 hours or so of the trading day. As soon as the new SEP came out, it was a bloodbath for markets, to say the least. Okay. And what happened was the Fed actually raised their GDP estimates, okay, for 2024 and 2025, right? We're no longer in 2024, so keep that in mind, clearly. Their unemployment rate, they projected that lower for 2025 from 4.4% down to 4.3%. They raised their inflation estimates on the headline PCE from 2.1% to 2.5%. And they raised core PCE targets from 2.2% to 2.5%. But they also raised their projections for where the federal funds rate would be by the end of 2025. Essentially, instead of pricing in 3 to 4 cuts, the Fed came down to pricing in 1 to 2 cuts. And that's what really caused markets to sell off. Question is, do we keep the same 3.9% target for the end of this year? Does the Fed lower that? Do they raise that higher, indicating less cuts? I think it's a toss-up, right? It'll tell us if the Fed is more concerned about the economy or about inflation. Okay, if they move their target up, meaning they're, expecting federal funds rate to be, let's say, 4.2% by the end of the year. That means they're less concerned about the economy, more concerned about inflation. If they lower this back down to like 3.5% by the end of 2025, they're more concerned about the economy. And to be honest, I don't know what's going to move markets more. If the Fed is worried about a recession, I don't know if that's good or bad relative to the Fed worried about inflation, right? You could make an argument that they're both just bad. So again, the best case scenario is probably not much of a change here. Now, obviously, if they revise PCE inflation targets lower, that would be a good thing. I don't think that's going to happen. I think they roughly stay the same. Now, the unemployment rate, that's going to be interesting because by the end of 2025, they were projecting 4.3%. There's a lot of changes, though, on immigration, deportation, and you're really not seeing those immigration levels coming in. So that could help to raise the unemployment rate, which could make the Fed a little bit nervous. And I think the unemployment rate projection is a bit of a wild card for the SEP coming out tomorrow. And GDP is also a wild card. So we kind of already know the Fed's going to keep inflation targets high. Federal funds rate's a bit of a wild card as well. Again, what do they care more about, preventing a recession or, continuing to put pressure on inflation? But the GDP targets are going to be really interesting because currently the Atlanta Fed GDP Now tracker, and we got a new update today, is coming in at negative 1.8%. Okay, you're severely negative for Q1. But the Fed's 2025 target for GDP is 2.1%. Does the data that we've got so far in this quarter, Q1, lower their targets for full year GDP? Okay, let's say full year GDP comes down to like 1.5 or 1%. That's a pretty big change. Now, if GDP comes down theoretically to like, let's say 1%, but the Fed also prices in less cuts, then that's kind of a stagflationary environment. I don't think the markets are going to like that either. So it's not just one component of this SEP that's important. It's really the combination of all of these. And what does the narrative say? Now, I don't think, again, PCE is going to be revised up. I think the Fed's going to just keep that where it is. If it is revised up, that's obviously a problem, but it's really the unemployment rate, GDP, and where the Fed thinks their federal funds rate will be by the end of this year. Any changes to those, I think could be large. I think GDP could come in way lower. I think federal funds rates might actually not move. So less growth with less cuts potentially could be the outcome of tomorrow, which I don't think would be positive. And I think that's why you are seeing this pre-anticipatory Powell sell-off in momentum, in growth, in high beta. That's what you're seeing today. So I think that's actually what's driving the markets versus some of the data that we got out today. Now, what's also going to be important tomorrow is the actual speech from Powell, because yes, the summary of economic projections is going to tell us a lot, and markets are going to probably move a lot off of that at 2 p.m. But Powell comes out at 2:30 p.m. tomorrow, and he's going to get asked a lot of hard questions about the Atlanta Fed GDP. I would hope he's asked about the negative 1.8% reading for Q1 GDP. He's going to be asked probably openly about, does the Fed think a recession's coming this year? You know, he's going to be asked some very difficult questions. And Wall Street hangs on to every little word Powell says during that conference. So we're going to get that initial statement out at 2 p.m. Once Powell gets on the conference podium, he's going to read that speech. Markets tend to move up when Powell reads that speech. But it's the questions, the unscripted questions, that actually move markets the most. Now, in a weird way, I think if we were to see another, let's say 3% day tomorrow to the downside like we had December 18th, that may be enough to spike the VIX and get you a more meaningful low on markets. Now, is that the ultimate low? I think that depends, again, whether we go into a recession or not. But again, if we were to fall roughly 3% tomorrow, something like December 18th, which again, I don't know if that's going to happen, that would be a peak to trough decline in the S&P of over 11%. If the VIX were to spike and you see a bit of a capitulation moment, I would feel more comfortable calling a bottom. But like I've said on this channel for a while now, I don't think you get an actual bottom in markets until you get fear in the VIX. That has not happened yet. Once the VIX is above 30, then we can talk about fear, okay? Not this slow and steady rise. That just really means people are starting to hedge portfolios. They're not really rushing in. Once you see a big spike and people are rushing into the VIX, once people are rushing into bonds as protection, that's a more meaningful bottom, okay? Could that process start tomorrow? It is very possible. Again, there's a saying on Wall Street. Wall Street will stop panicking when policymakers start panicking. Do we get a bit of a recession panic from Powell tomorrow? Could that be the kind of final bit of bad news we need? It's possible. I definitely wouldn't rule it out. And I do think, unfortunately, the risks for tomorrow are skewed to the downside because, again, the Fed's not going to be able to raise GDP estimates in their summary of economic projections. They're probably going to have to slash those dramatically coming tomorrow. They're probably going to raise their unemployment estimates because of the dynamics that we have right now. I don't think with tracking negative 1.8% GDP, the Fed can confidently say that unemployment's going to, not go up, right? Unemployment's obviously going to go up, and they're probably not going to be able to lower inflation expectations. They're, what do they do with their federal funds rate? Are they, again, concerned about a recession, or are they concerned about inflation? It kind of seems like it could be a stagflationary kind of SEP tomorrow. And that's like the worst possible scenario where you have stagnating growth and higher inflation that doesn't allow the Fed to cut. It doesn't allow the Fed to, boost the economy when maybe you're like potentially borderline recession. We'll have to see. It'll also be important to see what the Fed does for their longer run neutral rate. In the September SEP, they had 2.9% for the longer run neutral rate. That's where the Fed would stop cutting rates. That's where essentially the Fed believes their federal funds rate is neither restrictive nor accommodative to the economy. Well, in December, that was revised up to 3%. Does it get revised up again? We'll have to see, because this was ultimately something December 18th that I think helped send markets lower 3% that day. It was kind of quiet at first. Nobody was talking about it. And then everyone was like, oh, wait, the Fed's revising their long run neutral rate forecast. That's not good. So with that said, I don't know exactly what's going to happen coming tomorrow. I think it's fair to say GDP estimates are probably going to fall. Inflation estimates are probably going to stay roughly the same, maybe a little bit higher. And you're probably going to see, I think the Fed suggests they're going to cut rates more than they previously thought this year. Although if they kind of raise those estimates, where the federal funds rate's not going to be as low as we expected, in other words, maybe only price in one cut this year, that would be seen as kind of a stagflationary outcome, which would probably be the worst case scenario. The best case scenario is nothing changes. And if nothing changes, that in and of itself could be a positive catalyst for especially risk on, because risk on has sold off a lot more than other areas of our markets, like Tesla, considered risk on. Okay, well, after today's 5% decline and after the over 50% peak to trough decline, I would say Tesla's a lot less risk on than it was before. The valuation has come back to earth and makes even a lot more sense from a fundamental perspective. Now, with that said, if we have a positive reaction tomorrow, if we kind of reverse some of this momentum sell-off that you've seen today, and momentum just got killed today, MTUM, the momentum ETF, down almost 2%, you could see some of that momentum start to come back tomorrow. And I think that puts Tesla in a pretty good position. At the same time, you could see another round of fear come into our markets, okay? You've had a 2-day bounce on the S&P that sent you up about 4% from the lows to the highs in 2 days. That's quite an aggressive bounce. You've started to retrace that now to the downside. If tomorrow is bad, you're going to break down and hit new lows. The level you want to watch for on the SPY is 547.38. That is the 300-day moving average. That's going to tell us a lot, because if we don't find support there, then you set up a much larger potential downside range as low as 500 on the SPY, which would be, a lot of downside. From all-time highs to your 500-day moving average, you would be down about 18.5%, almost 19% on the SPY. If the Fed is bad tomorrow, that's going to open the door for that much larger downside. Although I think we kind of have a pretty good understanding of what the Fed's going to look like tomorrow. And as long as we don't get a big change, that could actually be a positive. Now, one thing that makes me a little nervous to kind of say tomorrow is going to be bullish is the VIX. There's not a lot of fear out there. The VIX went from almost 30 on March 10th, now down to 21.54. It's only up 5% today, even though the indexes are getting pretty smashed, okay, and especially momentum. Not a lot of people are fearful. And when there's not a lot of fear out there, it opens the door for fear to come into markets. And as I've said many times here on the channel, I don't think this correction is over until you get a flush out of sentiment and until people get fearful, right? That's normally when corrections end, is when you see big spikes in the VIX, when everyone rushes out to buy put protection on their portfolio. That has simply not happened yet. Tomorrow could be that day. If it is that day and you get a flush out of sentiment, you get a flush out of positioning, and ultimately people rush to hedge portfolios, aka a big spike in the VIX, that could mark a more interim bottom. What will ultimately decide whether or not we move lower is, do we go into a recession or not? So, well, I can't tell you definitively tomorrow is going to be a good or bad day. I can tell you I think it's either going to be a really good day or a really bad day. And that's the same for Tesla. It's either going to be a really good day tomorrow or a really bad day tomorrow. And honestly, you can make a pretty strong case for either or at this point. Markets are down a lot. We've priced in kind of a lot of bad news. Economy's weakening. We've priced in a little bit, more of in terms of cuts from the Fed, but not a whole lot. If the Fed comes out and they're not as concerned about the economy, they think inflation maybe from tariffs is not going to be as bad as expected, maybe they're willing to cut rates a little bit more. That could be a very positive outcome. Vice versa. If the Fed slashes their GDP estimates, if they raise their unemployment estimates, and they feel like they're not going to be able to cut as much as they thought this year, that's a bad outcome. So honestly, there's a case for either or. And on the downside, if we do get that downside, you want to watch that 515 level all the way down to about 512, because that is where you were on October 23rd before you went up 22% the next day. Okay. If you get below that, then you open the door for those, 190s, 180s. And I mean, that's where I personally would want to go in with a big DCA purchase. Okay. If we did start to retest some of those levels, I don't think it would happen in a single day, but I think you could see another 6-7% decline tomorrow. If Powell is not exactly super bullish, that could put you down to about 213. Vice versa. If it's a really good day tomorrow with Powell, you could see a probably 10% upside day. And you're looking at Tesla that could be theoretically back to about 250. That's what I mean. It's going to be a pretty big day, regardless of what direction we ultimately go in for markets. And I can also tell you Tesla is still sitting oversold on the RSI at 29.78. Historically, it doesn't stay here for long, and you've effectively been oversold since February 25th, almost a month now. That would be like the longest streak on record. I mean, you were pretty oversold here from about January 17th through February 7th, 2024, and then you bounced, right? Other than that, there was a period here, December 16th, 2022, through about January 5th, 2022, that you were pretty oversold as well. But this is the longest period you've ever been oversold in Tesla. And that just shows you how washed out the sentiment is around Tesla. There's so much fear out there. Even a 10% day tomorrow may not rectify some of the blowout of sentiment that we have seen. It could be even larger than that. And I think right now is not the time. Personally, you want to be short in Tesla or betting against Tesla in any way, shape, or form. And really, you should just prepare for extreme volatility. So let me know what you guys think about this down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.